hour, the United States and China have extended a tariff truce for another 90 days, staving off triple-digit duties on each other's goods. Trump announced on his Truth social platform that he had signed an executive order suspending the imposition of higher tariffs until 12 a.m. EST on November the 10th, with other elements of the truce to remain in place. China's Commerce Ministry has issued a parallel pause on extra tariffs, also postponing for 90 days the addition of US firms it targeted in April to trade and investment restriction lists. The tariff truce between Beijing and Washington had been due to expire today. According to reports, the extension until early November buys crucial time for the seasonal autumn surge of imports for the Christmas season, including electronics, apparel, and toys at lower tariff rates. Meanwhile, China and Hong Kong shares have climbed as the extension of a tariff truce between the US and China helped cushion investor sentiment, according to reports. At the close, the Shanghai Composite Index rose 0.5%, while Hong Kong's benchmark Hang Seng Index ended up 0.25%. We're now joined by Peter Cardello. He's a chief market economist at Spartan Capital Securities, and he joins us live from New York. Peter, thank you very much for joining us. Pleasure to have you on the program, as always. First of all, how significant is this 90-day tariff extension for the US and Chinese exporters, especially ahead of the Christmas season and in sectors like electronics, apparel, and toys?
Yeah, I think it's very significant, and it gives wiggling time, let's say, to China and the United States to come to some mutual agreement. And it also, indicates that dealing with China is not as easy as the President administration thought. And so, therefore, the administration is acknowledging that it needs more time, and it should help perhaps relieve the pain of higher prices for electronics and things of that nature before the Christmas season. Now, by that I mean there's probably an early start to Christmas shopping, and so you could see a lot of these products being moved off the shelves before some sort of an agreement, which would obviously mean higher prices and eventually higher inflation.
Yes, Peter, we've also seen Shanghai and Hong Kong stocks tick up after this announcement. How much of this is a short-term sentiment boost versus a reflection of underlying trade fundamentals?
Well, I think it's, the fact that the markets applaud this type of news is good news. And it means that your investors have not decided to abandon the markets, but react to this type of news. And it means that if deals that are favorable to each country without the prospects of perhaps stronger inflation emerging, that the markets are probably headed higher. And so, anytime the markets react positively to this kind of news, it's a good long-term perspective for the markets to move higher.
Peter, how do repeated short-term extensions like this, which have come all too common under Donald Trump, affect business investment decisions, supply chain planning, and price stability for consumers?
Well, that's becomes a bit more difficult because Trump changes his mind quite often. And so the more often that happens, the greater the uncertainty factor builds. And businesses are reluctant to make any long-term commitments. So it's, it works both ways. It gives some breathing room, and then, of course, it creates even more doubts and, to a certain degree, even confusion.
Peter, finally, which side, Washington or Beijing, stands more to gain from this pause, and how might that shape trade talks leading up to this November deadline?
I think both sides have probably, I think both sides will probably be the beneficiaries of deals that won't be too costly in a sense of inflation, and without impacting the economies. So it's a give and take, and I don't see any one country, and that does not, and I'm not only referring to China, but to all our trading partners, either winning or losing. Eventually, some of the countries that have been placed with higher tariffs, they will come into line as well. It's for the beneficiary of everyone to make deals and not to wreck their economies.
Yes, Peter Cardallo, thank you very much for giving us that insight and explaining that to us so clearly.